AMD has been falling considerably over the last little while. Now, I covered this company a couple of months ago. We're going to load this up in the stock research tool and get an update of where this company currently stands. So, hit a high of 164.46, and we are now sitting at 93.50. I'm liking this price decrease. Now, the one thing I want to try to find out, though, folks, is it a justified decrease because the fundamentals of the business has changed? Or are people just overreacting? If it's overreaction of people, this is where we're going to strike. This is where we're going to go in and see if this company's undervalued and jump in and get some shares, because I like this business. And the only thing that was holding me back is its over evaluation. So currently sitting at 8 out of 10 in our financial evaluation section, with 2 points being lost to our PE 5-year average, sitting at 76.20, incredibly high. And our share dilution, they've been issuing us a lot of shares at a 36% increase over the last 5 years. Now, folks, that's the PE ratio. It's not the worst thing, but that is just an evaluation perspective. But the share dilution, now that is the kicker, guys. We want companies issuing less shares, buying back shares, because that increases the ownership of us. For us, the shareholders, it makes sense for the company just to say, instead of taking on debt, let's just issue out more shares and have people just buy into this business. People are going to buy the shares anyways. And look, it's evident here. You look at the debt to equity ratio, super low. They're growing this business through equity. Ties in together, huge return on equity. We're seeing a lot of positive traits here. They're earning a lot of points, huge EPS growth over the last 5 years. And look at this growth, guys. Net income, free cash flow, return on invested capital sitting at 22%. We want to see this 10% or higher. We have that, no problem. Revenue growth sitting at 32% increase. And you jump into the income statements. And look at this revenue growth, guys. Take a look. AMD is crushing it. Absolutely crushing it. Huge jump. Well, look, everybody's inside. During the pandemic, everybody was inside playing video games. Esports is at an all-time high. There's a lot of things happening for this business. Chip shortages, the demand, they have a lot of things going on for them. They're priced more competitively than Intel in terms of their products and offered just about the same performance, if not better, to be honest with you. Like, I don't run AMD typically, but their products are solid. It's a solid business. They're nipping at the heels. They are nipping at the heels of Intel, a giant corporation. So they're doing what they possibly can. Now let's just take a look at this, guys. Free cash flow, $800 million on average. It's our average free cash flow, 5 years. Currently sitting at $3.31 billion. Net income, $3.39 billion. Revenue is $18.8 billion, right? Our profit margins are up. They're doing a lot of things right. High Altman Z-score. Now, I don't really care about that number because they're a tech business, but it just indicates to us that they are safe relative to going bankrupt. So we want this number over 3, folks, and we have that easily. Piotrowski score is very average. We want to see the 7 or higher, but they have a lot of things going for it, but yet the price has been decreasing. So, guys, I gotta ask the shareholders, are you scared? Are you guys, if you're holding this company right now, are you scared that the price is going down? You shouldn't be. There's a lot of great prospects for this business. Now, are you overpaying for it? Now, that's another story. If you're looking to get into this business, we're going to find out what it's actually worth. We're going to do a price analysis. And if you're liking the video so far, folks, hit that like button, hit the subscribe button. This software that I have in front of me is going to be an app for you to use. It's coming out very, very soon. It's going to be on our website, and you'll love it. You have access to everything that you see in front of me. The financial evaluations, company metrics, which compares the trailing 12 months to the 5-year average, the financial evaluations to quickly grade the company out of 10, as well as you have the income statements, the cash flow statements, balance sheets over a 10-year basis. You can file that annually or quarterly, and more stuff is on the way. Guys, you're going to love this software. So we're going to jump right into a price analysis here, and we're going to figure out what AMD is worth. So stay tuned for that. Okay, folks, so here's what we did. We did a 10-year evaluation on AMD because I believe this company is going to be around for longer than 10 years. We're going to do 3 evaluations here: conservative, moderate, and aggressive. And if you're new to the channel, this is what I like to do. I like to do a conservative approach to this business. Now, I know they can hit 60% revenue growth. I know they can do 32, and I know they can do 68. They've proven these numbers. However, we want to give ourselves a decent margin of safety. Now, I'm not saying that because listen, what I want to do here is if they can crush these numbers and do better than my numbers, that's more comforting to me because that gives me the margin of safety to know that this company is like grossly more undervalued if it hits these numbers. Profit margin, I want to keep this around our 5-year numbers because that makes sense. I don't want to exceed our 1-year numbers, so I'm going with a 10, 12, and 15 approach. Free cash flow, same thing. I want to stay as conservative as possible. Now our price to free cash flow and PE ratio, we're gonna go 14, 16, and 18, keeping that underneath 22.5 for the PE and underneath 20 for the price to free cash flow. Desired return, lucky number 13, and let's see what we got here, folks. So we're getting one Greene here. Average calculation is $53.55. We're currently sitting at $93, 32 on the low end, 51 on the high, moderate, and 77 on the aggressive side. Now that's assuming a 16% revenue growth out of curiosity. Keeping everything the same here. If I did, let's say it grew 20%, higher than our 5-year average, slightly lower than our 1 year, we're gonna hit $63. So the one thing with AMD that's just bothering me right now is that it's just overvalued. I think the company's great, but just doing a price analysis now, look, my assumptions are decently conservative because I wanted to do better than these numbers. Now I could put this at 30, could put this at, let's say, 25, 28, 30, give myself a smaller margin of safety. Now I do a smaller margin of safety here, folks. I'm sitting at $170 a share. We're green across the board pretty much here. Look at that, 96, 168, you know. Well, that's pretty much almost fair value sitting at these prices. But you have to assume this revenue growth. Are they able to keep up these high levels of revenue growth? Is this 1 year, to me, it's an anomaly. Like, look at this jump. It's been relatively consistent, right? So you want to stay with the consistency. I can't say that this is justified. I can't say that it's justified for the years to come. So we have to put our margin of safety in. So I can't really go based off this price. But if you can, if you think they're going to grow 25% a year, guys, it's a buy. It's a buy based off these prices. However, our DCF is not hitting. So for me, I'm gonna stick with these numbers here. With what did I do? 12, 14, 16, something like that. Yeah. $53 needs to fall a little bit more. And you're probably wondering, like, why does it need to fall that much? Because look, guys, the game we are trying to play here is to buy companies with a decent margin of safety. That's what we're trying to do here. We are value investors. We don't want to overpay for this business. I like this business. I own shares of Intel, but I'll gladly own shares of AMD as well. But the price has to make sense. There's a lot of great things going for AMD. We went through these financial valuations, green, pretty much across the board. But the one thing that affected it, as I said early on in the video, valuation. Valuation and share dilution. This needs to stop. This needs to stop, or it's going to ultimately affect all of this. But great, guys. Look at what we got going on over here. Increased profit margins. We went through all this stuff. It's a solid business. There's no doubt about that. It's just the price needs to make sense. What are your thoughts on this evaluation? What are your thoughts on this software? If you will love this software, my email is down in the description box below. Send me a message. I respond to all comments, all emails. It's coming out soon. Let me know a company that you want to see evaluated, and I'll catch you in the next video. Thank you so much for watching. Till next time.